Any sales growth in the real estate market we might have had early in the year is now gone. New home sales contracts are coming in pretty consistently fewer than last year now. 4.9% fewer new contracts started in the most recent week. Our immediate sales measure of homes that get listed, take offers, and go into contract just a few days after listing is also notably lower than last year. On the supply side, new listings are slightly more than a year ago, but pulling back. In fact, the coming soon pre-listings are now running behind last year by 5%. So that implies a continued slowdown for home sales in the second half of the year. Fewer buyers, of course, and it looks like fewer sellers on the horizon too. So now I speculate whether the 2024 market is beyond saving. Are we past the opportunity for declining mortgage rates to help demand and pick up home sales growth this year at all? And to explore more in depth in our August webinar, which is now open for registration. On Thursday, August 15th, we'll be looking a little further ahead into the fall market. The registration for that is available now. It's an August webinar. There's a link in the description below. Click that to reserve your spot. At Altos Research, of course, we track every home for sale in the country every week. All the pricing, all the supply and demand, all the changes in that data, all the sales, so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's take a look at the details of the U.S. real estate market at the end of July 2024. There are 677,000 single-family homes unsold on the market right now across the country, plus another 180,000 condos and townhomes. So that's up 1.3% from last week. So inventory continues to climb each week. It's normal for inventory to climb in late July, of course. We are expecting probably October this year before inventory of unsold home peaks for the year and starts declining for the holidays. The peak of inventory looks like it'll be about 700,000 single-family homes and finish the year about 620,000. So that'd be a 20% increase over the end of 2023. So right now there are 40% more homes on the market unsold than last year at the end of July. As mortgage rates rose late in the year last year, so did inventory. So this year I'm expecting to not have that late year surge. So the growth over 2023 will subside a bit. Inventory is up in every state, of course. Several states have more unsold inventory now than in 2019. You might call that back to normal. The gap has been steady at 40% gains for 2 full months, so it's not expanding. And like I said, the comparison with last year will get easier, so we'll finish the year with maybe 20% inventory gains. So in this chart of unsold inventory, each line is a year, and it helps give perspective of where the country is now. So compared to how many homes used to be on the market in the years before the pandemic. You can also see that late year surge in unsold homes in the 2 red lines from the last 2 years. So in 2022 and 2023, mortgage rates jumped in September and October, and so did inventory. So I keep keeping my fingers crossed that this year is the opposite trend and that we'll see rates fall in the 3rd and 4th quarter, and so inventory won't have that late year surge. There are 68,000 new listings of single-family homes unsold this week. So that continues the recent trends. There are fewer sellers than normal and slightly more than last year. But the gap from last year is closing. So the sellers seem to be backing off. And I'd guess sellers are as tired of waiting for mortgage rates to fall as buyers are. So in Texas, for example, there were 8,300 new listings for single-family homes this week. And that is pretty much exactly where it's been in late July for several years. So earlier in the year, Texas had around 10% more new listings each week than in recent years. So that's not true anymore. 2024 has shifted from growing number of sellers to flat compared to last year. Florida and Arizona, for example, show similar patterns. So these states led the country with inventory growth, with new supply and weak demand early in the year, and now no longer really have that supply side of that momentum. So the unsold inventory is more, but it's not really growing. So nationally, 68,000 new listings unsold this week, plus another 14,000 new listings that went immediately into contract. So 14,000 immediate sales. That's actually very low compared to the last few years in July, which is consistent with weak demand. Overall, there were just 4% more sellers this week than the same week a year ago. So in the first part of the year, there were 10 or 20% more sellers each week. Now there's 4%. So that's what I mean when this seller momentum has evaporated, that the growth of inventory is plateauing. And for a bonus chart this week, here are the coming soon trends. So coming soon is a marketing technique that's only used in some places by some agents on some homes. But these are homes that will be listed in the future. So they're doing pre-marketing. And we can use this as a leading indicator for future listings. The trend on coming soon was super high in June 22, when everyone was hurrying to get the house listed as mortgage rates were spiking. It dropped dramatically after July of that year. This year, we saw some seller momentum early in the year, but you can see now how that dark line is back down to last year's extremely low level. So this is another indicator that there's no surge of inventory in the works. If there were, you'd see some of them listed as coming soon. So even as we can see no big surge in inventory coming, sales are down and haven't recovered. So it seems like there's just no incentive to buy right now. Rates are down from their peak, mortgage rates are down from their peak, but not down that much. So if you're buying, you might be waiting to see if rates decline further. Some buyers I know are waiting till after the election. So there were 65,000 new contracts this week. That's an uptick for the week, but 4.9% fewer sales started than the same week of July 2023. So where in the first half of the year, I was reporting on some slight increases in sales and these contracts over 2023. Now we're running behind last year. So since May, you can see the weekly sales rate is down and not showing any signs of recovery. I've highlighted that time in gray here. This year's dark line is now running fewer new contracts each week than last year. And now I've been saying that as I expect, as mortgage rates were to fall under 6.75 to 6.5 maybe, we would start to shake some buyers free. We haven't crossed that threshold yet. Rates dipped down to maybe 6.8%. But I would have expected to see some slight improvements in purchases, but we don't see any. So maybe there's some inverse psychology happening here where if rates are rising, you want to get in before they go up more. But if they're falling, you want to wait until they fall more. So maybe I'm totally wrong in assuming that if rates dip this year, we'll see any sales pickup. So maybe the opposite is true, but that's why we track this data each week and continually test the hypothesis. So keep your eyes here on what happens next. And this is really what I was talking about when I say, is 2024 a lost cause for home sales gains? On the other hand, the median price of homes on the market is $450,000 again this week. By this measure, home prices are unchanged from last week and from last year. In fact, home prices are unchanged across the country for 2 full years. And if we discussed this, in fact, 2 years ago as a possibility, the asking prices will start ticking down in August. The median price of the new listings is $419,000. So that's the cohort of homes newly listed on the market this week. It's showing reasonable resilience in pricing. Home prices have a downside stickiness, which means the sellers are very slow to accept want to accept lower prices even when demand falls. So the new listings cohort is still priced 4% more expensive than a year ago. The median price of the homes going into contract this week is $395,000. That's still averaging 3 or 3.5% more expensive than last year. So we started the year with home prices up 5 or 6% over 2023. That increase is now 3.5%. So I expect this number to compress under 3% before the end of the year. Home prices are up some, but it's basically very little change in price of homes nationally, almost flat. Some markets, home prices are up a little bit, some prices are down, some places they're down, but across the country, about 3.5% home price gains right now over 2023. The headlines you'll hear, like the Case-Shiller Index, which will come out the last Tuesday of July for data reflecting March, April, May, will still be showing decent price appreciation from last year. I expect those headlines you hear will slowly decline for the rest of the year. There's nothing in the pricing data, though, that indicates broad home price declines for the rest of this year. So if mortgage rates jump again, I would be on the lookout for prices to adjust as demand takes another hit, but fingers crossed that they don't jump again. And finally, we will look at the leading indicators for future home sales prices. This is price cuts, price reductions. So perhaps the most notable trend in the price reductions data is that the weekly pace has slowed. So 39% of the homes that are on the market have taken a price cut from the original list price. That's a fairly hefty number. Obviously, demand is weak, so fewer sellers get the offer that they want, and more of them have to take price cuts. This week is a 30 basis points more than last week. So it's up a little bit, but it's not really accelerating. During this period in 22, price cuts were accelerating by 150 basis points each week versus 30 basis points now. In 22 and 23, both years had late year spikes in mortgage rates that stopped buyers, pushed sellers to cut their prices. And so we watched this stat jump, and you can see that late year jump in price reductions in both of the red lines here. So hopefully, if we're lucky, we see the opposite trend this year. Maybe we're past the peak of mortgage rates and affordability improves for buyers for the rest of the year. So if there's any demand pickup, one place we'll see it is in the flattening and decline of this price reductions trend line here. So the dark line is this year's curve, and I expect it'll peak in August. And if we're lucky, show a decline with new buyer activity later this year. So if we're lucky. But that's why we do this data work each week. Mortgage rates stayed higher for longer than anyone anticipated this year. Maybe we've finally turned the corner, if we're lucky. For buyers and sellers, these conditions can change fast, and they need to hear the data from you so they know how to respond. So go to altosresearch.com, book a free consult with our team. We can help you learn how to talk about the market in general with your clients and prospects, talk about your local market. There's a link in the description below to join us, so click that and let's get started.